If you're thinking about buying a manufactured home, you're going to want to know what a chattel loan is. Stick with me. I've been in the business for 50 years. My name's Kevin Lightman. I'm with Leaders Sales, and I'm going to teach you a little bit about what a chattel loan is and how it works today. Because of how a manufactured home is titled, how it's created, and when it's on a land lease community. So this is a mobile home community, manufactured home community, anything where you're paying lot rent essentially. It is a different type of loan than your average mortgage where you're on private land, you own the land and the home together. It's a traditional stick-built home. This is a different loan, and it's something that people typically haven't heard of until they start looking at manufactured housing, and then they're surprised by it, and it's confusing, and it can be overwhelming. The loan documents themselves can be really overwhelming too. So I want to just give you a little heads up on what this process looks like so you feel prepared. I also really want to throw out for legal purposes, I'm not a lender. I'm a manufactured home dealer. I deal with many lenders. I've talked to lots of them. I've seen a lot of programs, but I'm not a lender. I can't give you any kind of financial advice. I'm just telling you a little bit about the process and what it looks like. So chattel loans are specifically for a home that you own, like a personal property, on land that you're leasing. So when you're in a mobile home community, you're paying a lot rent, you do not own that land, but you are the rightful owner of that home. It's titled, it's in your name. So this loan covers that type of situation. And when you're dealing with chattel loans, you're typically not dealing with the lenders that you might be used to, people who hold your checking account, for instance, local banks, credit unions. Many of them, not all, but many of them do not carry the chattel loan. They might have mortgages, they might have all sorts of other products. This is a very specific product line that handles a very specific type of product. So not every bank does it, and most of the time local banks won't. I would always encourage you, if there's somebody that you already bank with and trust, you should ask, but make sure that you're asking the right question because they might be confused what you're saying. Many folks will, uh, they'll be able to do a loan for a manufactured home on private land that you own, but they might not be able to do a manufactured home in a community because of that lack of land ownership. So it's something really important that you should know, and you should ask those people that you trust. But then you also want to go on Google and look up chattel loans, chattel. Those that will produce the type of lender who carries this product. Along with that, you probably want to talk to your manufactured home dealer or the community you're purchasing from. uh, you might find that they have partnerships with certain lenders that work specifically within that community. Or in the cases of some of the larger companies, they might have like a lending arm to their existing mobile home parks, sales team, whatever the case might be. So they might be able to offer a special that you can't get elsewhere. It's worth looking into all those options, but you should do your independent research as well as what may be recommended or even just offered by your dealer or your community. So once you look through that, you're going to find a couple things. One, there's limited availability because not every bank does this. Two, there's going to be a difference in your interest rate. Usually it's approximately 1 point higher than what you would get for a traditional stick-built home. Again, I'm not a lender. That's not an exact number. It's just some kind of average I'm throwing out there for you. So if you would be approved for a 6.5% loan, you might need to prepare for a 7.5% when you get a manufactured home on leased land. The other thing you might want to consider is the down payments can vary drastically across lenders, across programs, across credit scores. There are a lot of things that determine what your down payment needs to be. I have seen as low as 3% down payments. 5% has been pretty common for folks with better credit scores and good monthly income. I've seen 20% as a minimum. So there's a wide range. You're going to have to see based on your credit score, your income, uh, your debt to income. There's a lot of factors that they're going to look at that may change what your down payment needs to be, which in some cases might be tough, but in some cases it might actually be really helpful if you can afford the monthly, but you're only able to save up a 3% down payment, there might still be an option for you. So it's worth looking into that piece of it, but that's going to look a little bit different. And the last thing that might look different is the loan term. Typically, in a traditional stick-built home on private land, you are looking at a 30-year mortgage. That's very common. In manufactured housing, if it's a brand new home, typically, and again, this is not every lender, this is just typical, you're looking at a 25-year maximum loan term. Some do a straight 20-year term, and then when you get to used homes, you might be looking at a 15-year term. So what you might find is, even if you're buying a home at a lower price point, and you're putting a better down payment, you have a good interest rate, your payments might still be a little higher than expected because you don't have the same kind of loan term as a 30-year term. So it can be a great deal for a lot of folks, but for some folks, it might actually be a worse deal than buying a traditional stick-built home. Hard to tell until you actually get into the paperwork and see what the requirements are going to be and what the terms are going to be. If you've stuck with me this long, I hope you give me a follow. I've got one more piece of advice. Before you apply for any chattel loans, I would look up that company and I would call them and try to get a real human and see what their programs are. A lot of times it's a shot in the dark. You're just throwing an application out there, and I've had a lot of customers in the past who tried to do this, and they're just throwing out applications and they don't know if they have any shot of being qualified, if there's a program that might suit them better. They're just taking chances. I think that you should always be informed from the start, especially before you start giving your credit information, running background checks, credit checks, all that. So I would pick some of the chattel lenders that you feel are going to be trustworthy or easy to work with. I would give them a call and I would tell them a little bit about your situation. Hey, I'm thinking about buying this home. Here's the purchase price. What are your terms looking like? What kind of programs are you offering right now? What kind of down payment should I be prepared for, etc. And then you can start weaning down to maybe your top 2 or 3 choices to actually apply to, instead of trying to apply to 100 different places and hoping that you find your best deal. As always, I think manufactured housing is the route to go for so many folks. These homes are much more attainable. There's so many options. You get a lot of bang for your buck and a lot of value. But the chattel loan is something most people haven't experienced unless you've already lived in a manufactured home in a community and you've gone through that process before. So I hope you feel a little bit more prepared. If you have any questions about financing, again, I'm not a lender, but I've seen a lot of deals go through. I've been involved from the beginning to the end. Please ask away. I'm here to help.